Good morning and welcome to the Gold, Goats, and Guns Market Report for today, Sunday, January 7th, 2024. My name is Tom Luongo, and we have a lot to talk about. And I am not going to talk about all the silliness that went on yesterday over January 6th, though I did find it really funny that everybody and their brother took advantage of the opportunity to, mark the 4-year anniversary of Happy Take Back the Capitol Day. That's the last I'll say about that. Let's get started this morning. I'm more interested today than uh, with what's getting planned in Germany than I am any of the rotten nonsense that Joe Biden has decided to run his campaign on. I spoke with Dexter yesterday for a while, and he and I both agreed that we're watching them open up the Biden campaign. All I'm going to say is this, real quick, is the following. Did they not learn their lesson in 2016 when they had Hillary Clinton run her campaign with a bunch of 31-year-olds out of Brooklyn? They're making the same mistake that they did then. Like if you read the article that I linked in the part 1 of the code predictions for this year, article that I posted on the blog earlier, this week, you'll see exactly what I'm talking about. They are literally running the same playbook that failed for them in 2016. And it's only going to get worse. But I want to talk about the new German truckers' revolt, which is happening all across Germany and is supposed to start tomorrow. This is a big deal. We have a German patron who's been helping me understand what's going on, feeding me good information and news about what's happening in Germany, and basically kind of like, my eyes and ears on the ground there, along with my other German contacts that have, showed up over the years and tried to help me understand Germany. We all know that Germany is the linchpin for the entire EU. As goes Germany, so does the EU. If Germany is in the throes of a political revolt, then so is the EU, regardless of the way Ursula von der Leyen presents herself at the podium. So, this is a real thing. This is a big, big thing. It's very clear that AfD is becoming a real problem for the establishment in Germany. There are now 3 things we have to take into consideration. 1, because AfD is surging towards 40% support in East Germany, the CDU, nominally the German equivalent of the Republicans, Angela Merkel's CDU, CSU, as they're known in Bavaria, the Christian Democratic or Christian Social Union, they're trying to, or they have now officially filed a right-wing splinter group. Now, the question is, what are they trying to do? Are they trying to split the AfD vote, right? Or are they trying to split the CDU vote? Because the CDU is leading AfD in the polls nationally. They're winning by about 8 to 10 points at this point. AfD is polling between 22 and 24% nationally. CDU is polling about 33%. The two of them could get together and easily, take over the Bundestag tomorrow. And, it would be, nominally, it would be a center-right anti-globalist coalition in Germany. And notice how that's not happening. As a matter of fact, what actually happened recently was that the FDP, which is the minor party in the traffic light coalition that Olaf Scholz nominally leads, had a vote as to whether or not they should dissolve the government or not. They should pull out of the coalition. Well, from what I understand, that vote was, no shock. They voted to stay in the coalition and not leave the government. That I'm not shocked about at all. And I'm actually not even shocked about this, that there's also, questions about the vote's legitimacy and its transparency. So reading between the lines and some of the broken German that I've been, trying to parse here. So I'm not surprised about that at all. But none of that matters. Excuse me. At the end of the day, no one can rule if they do not have the consent of the people. These people all across the West are desperately trying to hold on to populations that no longer want to be led by these, evil, blood-sucking vampire cocksuckers. And that's it. And you can see it rising at a rate that I don't know that they have a whole lot of control over. We're all worried about a civil war here in the United States, but I got news for you. There's a bigger potential problem in Germany. And for every attempt, in some ways, it's almost like every attempt that they try to continue to bust the United States apart, the opposite is the same thing is happening over in Germany. I'm not saying that there's any kind of directed mass here, or directed attack against the German establishment. There may be. And if it is, and if there is one, it's probably coming from the Brits, in the end, trying to, again, triangulate between the EU themselves and the United States. But that would be my first guess. But that being said, I have been accused of being a little spurgy. So, take that for, whatever it's worth. But these developments in Germany are real. Going back, chatting with Alex Mercouris now for 6 years, I always have him on my shoulder when we start talking about Germany. The Germans don't like political upheaval. The Germans want things to be orderly, and they want their politics to be relatively orderly. And they don't like what they're seeing. They don't like what's going on. And, that is eventually going to boil over. And what you're going to have is a kind of slow simmer and then an explosion. Because that's the natural tendency for people like that. You see it in, I see it in my own behavior. I see it in, people who are the victims of this type of abuse, this type of emotional blackmail and abuse. You see them, trying to negotiate, watch their boundaries get trampled, and then they explode. And it's never a good scene when they explode. Okay. It just never is. And if you've ever experienced that, either because you've been the one exploding or you've been the one exploded upon, you know exactly what I'm talking about. So now imagine that at a national level. Okay. And they tried to manufacture that on January 6th, 4 years ago, and it didn't really work. And then since then, they've been trying to manufacture outrage and manufacture consent about this being an insurrection in order to radicalize, Trump supporters into violence. And it hasn't worked at all. Because everybody's looked at them and go, you're cute, but we're not taking the fucking bait. You're all feds. So I find that really, really interesting. Okay. I want to move quickly through these talking points this morning because I don't want to belabor a lot of this stuff. So let's watch Germany really carefully this week. It could be very interesting. I don't think anything dramatic is going to happen, but I could be wrong. But we didn't think anything dramatic was going to happen with the truckers' revolt in Canada either, and the farmers' revolt in, the Netherlands. And yet, here we are today. Okay. So FOMC member Logan comes out yesterday and says, you really all should still be planning on the possibility of there being more rate hikes. Now, that came out yesterday after the markets were closed for the week. The markets had given back a few basis points in the bond markets into Friday's close after I published the chart and the blog post on Friday. It's always frustrating to do that. Whenever I write something like that on a Friday, and Friday is one of my days where I have the most time to devote to writing publicly. And I want to get it done by Friday afternoon so it can hit the weekend news cycle. So maybe it'll get picked up by Zero Hedge and the whole 9 yards. But then invariably, I'm like, I should really wait until after the market closes. But then I don't want to work at 6 o'clock or 7 o'clock at night either. So, it's a tough life, folks. It really is. But I want to address something that's come up in the last few weeks. And it's come out of the recent patrons who I've really appreciated their knowledge and their clear knowledge and understanding of what's going on because they work professionally in financial markets and they've got really good insights into a lot of things. And I'm like, I see their posts and I'm like, auto read. Okay, what are they talking about? But at the same time, it became contentious at some point because there's fundamental disagreements about what's going on with the with Powell and the Federal Reserve. That we've reached this moment that, the gaslighting became about, with the bond markets moving as hard as they did, it uncovered a real functional split. And I'm going to go into this now. One of those people has now quit and is now turned into a gadfly for me on Twitter. It is what it is. I don't care. I'll continue to treat him, reasonably well until, he gets rude. And then when he gets rude, I'll be like, oh, look, narcissist. What a shock. Fuck off. And then I'll get blocked and that'll be the end of it. I've dealt with this before. This is not my first rodeo, folks. But the important point about this is not the people themselves, but what this brought up, the arguments that were brought up in all of this. And again, this is not calling people out. I get it. Like, you don't agree with me, and that's fine. That's cool. I want that disagreement. There's no argument. What I'm gonna now say is the following. The argument is really simple. The worry over the Great Reset, the Great Taking, whatever you want to call it at this point, I don't like this whole Great Taking thing. I really find this very, very, I don't know what's the word I'm looking for. I just don't, I find it very suspect. Like Vivek, I find it, like H-1B Obama, I find it very suspect. But I want to remind everybody that, if you're of the hardcore libertarian bent, which apparently these men are, well, you're worried about the communist takeover and the destruction of the middle class because, with every communist takeover, there is a destruction of the middle class. That's exactly what's going on now, right? And everything else. But what's coming out of the argument is that the Fed holding interest rates at 5.5%, the higher for longer, is destroying the middle class. I'm like, no, I guess you slept through Rothbard 101 and Ron Paul 101. The boom is where the middle class got wiped out. The middle class got wiped out 15 years ago. We're only now just realizing it. You don't, and this is, I think, and so what we're getting at here is, oh no, Powell needs to cut in order to keep the middle class from going broke. The middle class is already broke. It's already done. The boom is the disease. The bust is the cure. You've already you've already made the problem worse. You've already poisoned people. You already kept the system alive. The way the metaphor for this, the common parlance is, oh, you just injected it with more financial heroin. It's actually a really bad metaphor. Okay? The better metaphor is that the middle class and the economy is type 2 diabetic. Okay? I would argue that we treat diabetes, which is especially type 2 diabetes, not necessarily type 1 diabetes, which is a much different process. Not having a functional pancreas is different than extreme levels of insulin resistance. You can cure type 2 diabetes by changing your diet, by changing your lifestyle, and all the attendant effects, downstream effects of that, the autoimmune disorders and everything else that go along with it. Okay? You might have to get really militant about it and go like full carnivore or whatever, but there's ways of going there, right? Ways of going through it. You can cure type 2 diabetes. I'm standing here talking into this microphone, having proof as prima facie evidence that that's doable. Okay? Now, how do we treat type 2 diabetes? With insulin. We just give people insulin. We don't tell them to get off the bad food. We don't tell them to stop eating sugar. We don't tell them to stop eating bread. We don't tell them to clean up their lifestyle and get their inflammation markers under control and to do intermittent fasting and everything else. That's all the new fad. And what these men are arguing, and I know it comes from a good place, is that we should just lower their insulin dosage. No. You have to go through the process. Zero-bound interest rates were giving the middle class insulin. The middle class was already type 2 diabetic. The economy was already metabolically challenged, metabolically impaired, and we made it worse with 13 years of zero bound interest rates. The way out of that is you reach a point with your type 2 diabetes, and I know this feeling, that you either have to clean yourself up now or you will die. And there are no other options, because every other system, and this is why heroin's not a good metaphor here, every other system is downstream of the fact that your liver is so bound up and full of fatty intrusions. You can't talk to the thyroid to deal with to regulate your metabolism, and you process the food that you're eating. And in the process of doing all that, it's going to get worse before it gets better. You're going to release all the fat soluble toxins that are stuffed into your sub-Q fat and your visceral fat, all through your midsection. Like it's miserable, folks. It's the first 4 months of it are hard. Your breath is going to be terrible. No one's going to want to be in the same room with you. You're going to stink as you get rid of all of this stuff. And if you have the fortitude, you come out the other side bigger, faster, stronger, better than you ever were previously. That's what Powell is doing with higher for longer. And all he's doing is normalizing rates back to where they should actually fucking be, and then want to hold them there. And then everybody else has to deal with that in their own way. And if he never has to go any higher than 5.5%, but can just hold that in perpetuity while he shrinks the balance sheet and forces Congress to change their tune. Congress wants more insulin. And sadly, so does everybody else. But really, what the people who are really screaming pivot want is that they still want to be the doctors prescribing the insulin, because they understand what the process is. So that's, in a nutshell, for the uninitiated, for the new people in the audience, or however you want to put it, for those who are not Austro-libertarians. Like, this is why I went down this route. And to watch Powell do exactly what I would have done had I been Fed chair. As a hardcore Austro-libertarian, he's doing exactly what I would have done. Create facility after facility after facility to ensure that that money goes into the hands of those who desperately need it, but that money is going to still be hard. One, it's still going to cost you capital. You're going to have to go to the market and say, we have a plan to improve our balance sheets and, give us money, i.e. raise capital, and stop asking for a handout and stop asking for the easy path. And we all get that. So, seriously, this is a type 2 diabetes problem. This is curable. And I hate to say this, but the Luke Romans and the rest of them who say it's not curable, that the math doesn't work, they're wrong. They're absolutely wrong. We can do this. I don't know that we will do this. Ask me what the probability of these things happening is, and I'll scream at you. We can argue about whether or not Powell should cut rates this year to 4.5% in order to give the patient a little bit of breathing room. You don't cure it all in one step. That's possible. But none of this, we need to go back to friggin' 2.5% or whatever. You're crazy. All you're doing is all you're doing is backsliding. And all you're doing is saying to them, no, really, you can go back to eating donuts now. And you really can't. You never really could. Yeah, by the way, donuts are bad for you in every way. Only if you were to fry your donuts in tallow, then the tallow is good for you. But everything else, the combination of the sugar and everything else that goes along with the fat, not a good idea. No, baby, just say no to donuts. And it's hard. It's really hard. Because the most powerful drug we ingest on a daily basis is sugar. Well, that and, shit ass propaganda. But we'll go from there. All right. That being said, let's get to the markets. I'll get you out of here. Okay. Yay, gold. Let's make sure that you can actually see my cursor and we'll get this done. All right. So yay, gold. We had a great run in gold from October all the way up into last week. And now we get a little 1-bar reversal here. We should expect this, right? We got a 2-bar reversal here. We didn't, the market didn't collapse. We got a blow off top and, never got a close, on a weekly closing basis below 2,000. That's nice. We got a nice, run into the end of the year. That didn't challenge the all-time high, but it didn't need to. This was a psychologically important event here. And the market weathered it pretty well. Now, is it rolling over? Yeah. Are we going to get a retest of 2,000? Probably. Is that unhealthy? Absolutely not. As I was saying about Bitcoin weeks ago, you had a 60% run in the price of Bitcoin. You're yelling at Mr. Slammy for taking back $2,000 on a run from 26 to 44. Like, are you kidding? How greedy are you? Silver, on the other hand, is a mess. But I keep saying, keep pushing it down. Keep pushing it down. Keep pushing the beach ball below water. Eventually, it will explode. Silver is mired in a very ugly, sideways pattern here. It really is 26 on the high end, 22 on the low end with extremes in either side. And anything outside of that box is just not to be believed. Now, I will say this. We had a nice run here. We had a psychologically breaking moment. We had a dead cat bounce and a 2-bar reversal of the dead cat bounce. Not a good sign. Technically, silver's in a very bad position, but I will be shocked because it's below the cost of production to take it below $23. I mean, realistically speaking, at $80 barrel oil, come on. But, we'll see. All right. Moving on to Bitcoin. See, like I said, here's your 60% run, and then that was Mr. Slammy? Really? Like, this is a nice pattern here. Yeah, it's been capped. Yes, there's capping action happening with Bitcoin. That so far this week, this is last night's data. This is between midnight last night, Eastern Standard, and this morning. So don't read anything into this. This is some kind of breakout above these highs, because it's not. We haven't gotten a close yet. If this was all of this week coming up, that would be a different story, but it's not. What I want you to notice is, yeah, we got a flat top here because someone's obviously trying to cap the Bitcoin market before, I don't know, whatever was going to happen this week with the ETF sign-offs, which is, I fully expect shenanigans. But what I really like here is the rising set of highs, or rising set of lows. When we get lows, they're all higher than previously. That means that the bulls are coming in at successfully higher prices to support the price. Remember, because Bitcoin trades 24/7, 365, weekly closing prices or monthly, they're kind of arbitrary because it's not a, It's not a, Bitcoin market doesn't close on Friday afternoon at 5 o'clock. So the close doesn't have the same meaning, right? It has meaning, but it doesn't have the same meaning as like the gold market or the Dow. So it's to give you an idea of where the market feels like everything is at the end of that week, just aggregating, that 168 hours worth of trading, right? So there you go. And yes, for those of you who are, I can multiply 7 times 24 in my head. I know somebody out there is listening to this going, yeah, he's nuts. I am. And you guys know that. So I hope that, I hope it's at least entertaining as you go through the maze that is my mind. All right. So Bitcoin, I think, looks good here. I like I like what we had last week. It's kind of a high closing price. Like, that's nice. That close is above all these other closes. That's nice. And maybe we're gonna get follow through action this week. But let's wait to see what Gary Gensler has to say, because he's been tasked with destroying Bitcoin. So let's see what he can do. Okay. Herculean task as far as I'm concerned. But hey, all right. Moving on. Brent crude. The best I can say about what's going on in Brent, this pattern is really ugly. I don't know what to tell you, right? It's really ugly. I mean, it's really volatile. It's really ugly. I mean, we're talking about 7% movement from week to week, right? That's what this is. This is the range divided by the current price. That's what this percentage is here. And Brent moves 7.3% a week. How are you supposed to trade it? How are you supposed to invest in it? What are you supposed to say about it? All right. The volatility is so high. It's so out of control that this should be, that oil is mostly uninvestable, and yet the numbers are clear. Demand is up. EV sales are cratering. The world is rejecting this whole concept that Europe has tried to push on us. So is this a bottoming pattern in Brent crude? Well, if it was less noisy, I'd say yes. I can't even give you a strong because we broke this high. I can't construct that. What I can say is that looks like bottoming action, and it's a very qualitative read. Okay. I'll just say if you draw a line here at $80, looks like somebody really wants $80 a barrel oil and nothing, no more than $80 a barrel Brent. But we have a nice high probability setup of breaking this last week's high and trying to break back above $80. And if we get a close next week above $80, certainly above this this high here, I think that would be significant. These other highs are just they're just noise at this point. There's so much noise in the chart, it's hard to tell. Okay, I would, for this chart, unlike Bitcoin, which trades all the time, I think opens and closes here are really important. Have become really important in Brent crude, especially on a weekly basis, because they're managing the market over the weekend. They're managing market expectations during the roughly 72 hours of the weekend or 66 hours of the weekend. Okay. Patreon request line. We only have 2. I didn't want to do 4 today. The list actually isn't very long. I think it's longer than it should be. I'm having problems with sticky notes, which is where I keep all these. And this morning it got lost. It just stopped working and wouldn't open on my desktop. So, it's so freaking frustrating. The millennials that worked at Microsoft should all be fired, but then Microsoft would cease to be a company. All right. The millennials I'm talking about, not the nice millennials that are in the audience here. You guys are all great. No, really. It's like you buy a hat like this, you get a free bowl of soup. Oh, it looks good on you though. Okay. Or a Caddyshack reference on a Sunday morning. All right, let's get started. Borr Drilling. It's a offshore drilling company, stationed out of the Bahamas or domiciled in Bahamas. It works worldwide. What I'll say is this downtrend here has not really been reversed. You could make the argument that this bar is a reversal of that bar, but this is actually technically an up bar, and then we didn't get a close above this bar. What I'll say is the following. Do we see price action above the high from this bar here? No. So basically $7, $7.15 to $7.25 is pretty much what the market believes is true value on the stock. It's a nice through line. We're just trading around this line at this point. I would say overall, the monthly chart is slightly bearish because we had a high, then we had a reversal, and then we've got a reaction high, and we could be rolling over, right? Because we've got a new low. But let's wait for a new set of highs and lows to see if we establish a new trend down. Paying 2.8% now. Apparently that's a new thing. I did read a couple of reports about what's going on with the company. And they had a bad Q3, which is why or they had a good Q3, I'm sorry. And they published a restructuring plan and all the rest of it. And Wall Street seems to like it. I didn't go much farther than that. I read literally did 5 minutes worth of due diligence on the company and went, that's interesting. But what I did notice out of this, is that this is now at least the second or third offshore driller that I've been asked about recently. And the other is Transocean, which I know I've done a look at, but it's been asked again. It's in the list, and I'm going to do Transocean again because it's kind of an important stock. especially as kind of a bellwether for the industry. I don't mind, updating my look at Transocean. It's actually a company that I've, been interested in on and off over the last, 10 years that I've been doing this. So, expect Rig to be out here on the Patreon request line one morning. So we'll figure out what's going on. For those of you who don't know, if you need charts read, you send me a DM, a private message or a direct message here on Patreon. Okay. And I will put it on the list, as it were. And they just, I just put them on the list as they come in. 2 per email, please. No more than that. Because then the list gets unwieldy and then, it becomes it's like no more than 2. So, and if you give me more than 2, well, I'm going to pick 2 and go on from there. So there's that. I find the interest in offshore drillers to be interesting. We've got, like I said, EVs are failing. Gasoline demand is up. The company has, new contracts. It's got a debt reduction plan. And to me, it actually feels like a turnaround story similar to Rig actually 10 years ago. It took Rig a long time to unfuck itself. So, this may be another one of those stories that takes a few years to finally play itself out. But that's probably this period, not this. And this is the beginnings of the next bull market in this stock. It's what it kind of feels like. But I got that vibe. Okay. All right, moving on. Blackstone Minerals is I think I'm not sure where they're domiciled out of, but they've got assets in Australia and whatnot. Okay. The big news for them, and this is what I found interesting, is there was a nice breakout in price about 6 months ago. I don't know why, but it doesn't matter really. But then we had bad earnings in Q3 or Q4, whatever their fiscal year is, in November on issues in Vietnam, because they have a big deposit of rare earths in Vietnam, and the guy who was heading up so basically there's a Vietnamese company wanting to develop this mine, and Blackstone's got an investment in this along with a couple other people, and the CEO of that company got put in jail for badness. And in Vietnam, it does not take any you don't have to be particularly dirty. You don't even have to be any dirty to be arrested in Vietnam. You want to talk about a place where the state acts arbitrarily. They ain't got nothing on the United States at this point. But that being said, I can make the argument here that there's it's because this is a rare earth mine that there's geopolitical risk. That this is a classic example of Western assets, Western companies trying to get access to rare earths outside of China, and China exercised some undue influence on the Vietnamese government to put this guy in jail to stop that flow. I can see that. I can construct that narrative. I'm not saying that's what happened here. I'm saying it's very possible that's what happened. That's what's happened here. And if that's the case, well, I put it in your head for the person who asked about this stock. Go thou sully forth and see what you find about this, because you might be surprised. So that's my inkling here. That's why the stock tanked in November, along with a bad earnings report. But part of the reason why it's a bad earnings report, I think, is because of this issue with Vietnam. It's got a high yield now. I don't know. I didn't do any further look into the company. So, it's still it's paying 11%, but I don't know how safe that dividend is with this situation with Vietnam. Okay. Moving on. Ignore that because that was supposed to be taken out. That was an old one. All right, moving on. Let's talk about our thing here. All right, the first thing I want to talk about is look at the U.S.-German 10-year spread. Now, I've been charting this for over a year now. This is when the TPI was announced back in July of 2022. This is the Fed's February 2023 meeting, where they finally convinced a lot of people that the Fed put is dead. The Japanese come in May or late April and basically turn the market. But did they really? Well, they did. They turned the market for themselves. But now we had this widening of the U.S. German 2-year versus the 10-year. And then since then, Lagarde has basically taken over. As the Japanese are exiting their monetary policy and the Fed has stopped raising rates, causing chaos, we now have we have no air at all. The German and U.S. Yield curves are completely in line with one another. Now, that is probably because that's the way Lagarde wants it. But I also want you to note that, as I said back in October, when the 10-year spread hit 2%, I'm like, this is not sustainable. We're back now into the 1.8 range. If Lagarde is holding these guys holding all of this together, a break below about 1.75 on the U.S. German 2-year spread, that's these lows here, would be a very significant event. Even on a daily closing basis, would be a very significant event. It would force Lagarde. We would have to. I want to see that happen just to see what Lagarde's reaction will be. Okay, because I expect it to be. Then we have to, radically move the U.S. Treasury market in order to try and make this work. Remember, we got a big rally in U.S. Treasuries, and these spreads collapsed by 20 basis points. It's that whole nasty capital flight into U.S. assets thing. So for 3-month futures curve, this was, I updated the dates here. I got rid of some older series. So this is our, these are the dates at what the curve looked like on those dates. But here is the end of last year. Here's Friday's close. 4 trading days. Look at the huge difference. And this was after the market gave back like 9 basis points over the course of the rest of the day. This was actually 4 point. When I published the article, the December contract was actually trading at 4.04%. So it gave back more than that. It gave back over almost 12 basis points. Like, was somebody going to go broke on Friday if the SOFR futures curve, the SOFR December 2024 contract closed above 4%. Wow. We're at that point. U.S. dollar index closed the week up at 102.43. The euro closed down slightly at 109.4. The yuan was flat. The yen is starting to creep back up towards 150. The British pound still continues to defy gravity. The Russian ruble is irrelevant. The U.S. German 10-year spread is now a solid 1.85 to 1.87%, and that's exactly what Christine Lagarde thinks she wants. The Japanese 10-year didn't move down a couple of basis points this week, undergirding all of this shit that we're seeing. The copper's flat. The U.S. 2-10 spread is narrowing. It's now at the narrowest level it's been in almost a year, negative 34 basis points. Let's watch to see if that drops below 30 this week. That's going to put upward pressure on the long end of the yield curve, and what's important is the belly of the yield curve starts rising. And that would be interesting. All right, let's move out. Let's go to the Dow. So we had a big move in the Dow. Are we calling this week Mr. Slammy? Have we cured ourselves of this? Thank you. No, this is not Mr. Slammy. This is what's known as a healthy correction. Note also that the Dow was only down 0.6% this week, but everybody else was down worse except for the Nikkei. A lot of people sold yen, and they bought some Japanese bonds, and they bought, and they, relatively speaking, sold very few Japanese equities. But everything else got crushed. This is a healthy correction in the Dow. Let's see if we have a high probability of a 2-bar reversal. We're at 80% chance of breaking the previous low. We have like a 95% chance of breaking the low from last week. So just looking at it, right? So it's like 90%. So we have a very high probability that we're going to throw the 2-bar reversal this week. And then it's going to be a question of where does the Dow correct to? Does it go all the way back to 35.5? Does it not? Does it stop at 36.5, at 36.7, or the previous all-time high around 36.9? That would be great, right? We'll see. But this is nothing bad here. Can't have winners every week. So with that said, I'm out. You guys be well. You take care. We'll talk soon. We'll talk on Wednesday. Keep your stick on the ice.